Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB. I'm Nadine Blaney.
And I'm Juliet Sarley. We look kind of in sync today. In real life we don't, but on screen we do. Anyway.
We're always in sync,
yes,
Juliet.
That is very true.
Because we're always watching this market. And this week, it's been a bit of it's got a bit of a vibe going on, doesn't it?
Absolutely. It's funny because often you see a bit of selling into a long weekend, but the market closed tomorrow for Australia Day, and we've had a fifth day of gains, so up since last Friday, up around 0.5% on the CBO 200 and a similar gain, I believe, on the ASX 200.
Yeah, and I think you raised a good point. It's going into a long weekend where there's still some pretty big data on tap in the United States, GDP, as well as the core PCE deflator, which is the Fed's preferred measure of inflation as well. So yeah, there is a bit of risk on the table, really, as we're heading into this long weekend. But look, why spoil a good party?
Exactly. And, I think what else helped the party was this China stimulus, the triple R cut, the potential market stimulus, and that helped a lot of our mining stocks, which we'll get to as well. But ResMed reality check, let's start with that because I spoke to our good friend, Mick Farrell.
It was a great interview too.
Thank you. He's such a lovely guy, and he did say, I said you wanted to see him next time he came in. He said he'll try and plan his meetings around ausbiz. But the key focus last year when we saw the short sellers attack ResMed was the fact that are these Ozempic, or these weight loss drugs, I should say, GLP-1, upsetting the likelihood of more or fewer obese people needing their sleep apnea machines. They also had a recall in the period, and despite that, they blew it out of the park with a very, very impressive result.
And it is one of the best performers today. We'll take you to the list in just a moment. On the total flip side of how things have panned out today, there's a pun, Domino's being cooked, absolutely hammered, came out after the market closed yesterday with a profit downgrade, saying any guidance that they'd given previously is now off the table. Asia, Japan actually, particularly weak, and shares, we'll get there again in just a moment, but the worst performer on the 200 and down, as much as 30% at one stage.
I love pizza, but when you've got all that amazing Japanese food and all the ramen and stuff, I guess you can see why potentially people are not buying as many as they might in Western countries. But let's have a look at the sectors. We talked about the miners. Fortescue came through with an update. The China stimulus boosting the iron ore price. I think Fortescue might be towards another record there, just very close to $29. Rio Tinto also had a very solid day.
Yeah, it did. We also saw copper up through the overnight period. It was very positive. Yep, China, the triple R rate story. Like all of the, expectation for stimulus, it may not come through. I was at a really interesting meeting the other day that was held by GSFM, just talking about structurally the changes that need to happen in China. But, there's no denying that the iron ore price has been very good for us here, good for the Australian budget as well. So we'll take these gains on screen. Healthcare, the big story obviously was still ResMed, but we did see other gains in the space.
Yeah, absolutely. And let's have a look at CSL Cochlear. CSL up by 0.8%, Cochlear up by 1%, Sonic Healthcare also doing very well there. And it's funny, we don't have ResMed on there. Or was it on the previous screen? Okay, Ramsay Health there off by about 0.7%.
Okay, a bit of news. You sort of touched upon Fortescue, but a bit of a fall in second quarter iron ore shipments. So a bit of a maintenance story as well, trimming its full year shipments target at the Iron Bridge project. And
we're looking as well at what happened with Santos. They reported a fall in quarterly revenue, down by more than 21%. Its share price, though, up by about 0.7%. Of course, we're talking as well about this merger with Woodside and whether or not that's going to get that regulatory approval.
And Mineral Resources, so yes, it was out with the quarterly today, so really good gains there in the share price. But I was chatting with Jessica Meir from Moomoo a little bit earlier on, and she was flagging Mineral Resources as one of those companies that has a lot of diversified exposure. So it's not just the iron ore, it's also got exposure to lithium. It's also a mining services company as well. So she had it on her list. You can catch up with any of these interviews that we sort of name drop throughout this program and podcast online, ausbiz.com.au. Look, every day we publish, how many?
A lot.
Yeah. A lot of interviews.
I don't have enough
to the website. And you obviously can't watch them all. We can't even watch them all, but we do catch up after hours.
We do. And we saw ResMed and Domino's there as well. All right. I think it is time to get to,
Domino's was the stock of the day.
Yeah. Kai Chen from MPC Markets and Michael Gable from Fairmont Equities joining us to share their verdict on the call with Koshi.
So just a lot to go. A lot that could go right, but a lot that could go wrong. And very disappointing update in terms of their Japanese sales. Same-store sales across the rest of Asia and France looked quite disappointing. And the big one there, just pulling guidance. So clearly the turnaround isn't ready to turn around yet. So even after today's 30% drop, I don't think you need to be that brave when we're seeing great updates elsewhere in the market. ResMed and their lithiums are turning around. If you really are after some excitement, I think
I think that was a bit of a laugh at the end of that.
It was. It burst my eardrums. But let's get now to our guest, Fraser McLeod from Shaw and Partners. You're focusing in on the uranium sector. Fraser, your colleague, I believe, was it Angus? I forget his last name, but had that really bullish update coming through with uranium at $150 a pound.
So Andrew Hines, who has followed the sector over the past 3 years for us, and it's been a magnificent call. So our clients were originally involved in the big capital raising for Paladin, which was the biggest capital raising in the sector globally over the past 10 years. Really, with them, they finally started production today, which was wonderful to see for investors. But so we've been on the journey with them from 20 cents, and the share price very bullish today, but in our eyes going an awful lot higher. I guess look, one thing on Koshi as well, with Koshi laughing, the share, obviously Domino's dominated today, and the share price getting absolutely hosed. It's like the Port Adelaide result in 2007 grand final. It just kept getting worse and worse really as the day went on. So there's some reasons to be bullish in markets as a whole. But valuation isn't one of them. We really look for maybe about a 15% return on the index, and currently the market's only giving us 5%. So some things, when they do disappoint, are going to disappoint pretty hard, and we saw that from Domino's today. But a disappointing sector is not the uranium sector. So yes, lots of reasons to remain bullish there. The main crux of it is that no one has any uranium, and no one's going to be able to find any uranium over the next couple of years in markets, and those who have got it are holding on to it.
So Fraser, I've got to give you credit where credit is due. You've been banging this uranium drum for quite some time.
For a long time.
For a very long time. I think as long as we've been on air. Coming up to 4 years, maybe.
Yeah,
so, is this the year of uranium? If so, what are your picks?
Look, without a doubt. So the supply constraints are absolutely real. So at this stage, the market remains pretty orderly. Whilst you might look at charts and think, "Gee, that's really, really bullish." The market is orderly because what we have not seen as of yet, and genuinely we believe that this could happen. Maybe not predicting it will happen, but we think it's a realistic chance that utilities will be forced into panic buying. If you're owning a nuclear power station, of which there is a massive build-out program around the world, you need it to be fueled. You need, in the back shed, at least 2 years worth of uranium. So utilities are currently covered globally in Europe and in North America. They're covered 2 years out. Now, they are not covered for 27, 28. And that's where the panic buying will start. You're not rewarded if you're the last one to panic, because you end up paying just any price for the product. And what is most definitely correct is that there is no product available. There's only a limited number of listed investments around the world that are uranium mining stocks that can supply product. And so the two majors that supply a lot of the volume over the past few years are Kazatomprom out of Kazakhstan. They produce about 40% of the world's global uranium, and then Cameco, the Canadian major. Now, both of those over the past few months have missed in their production volume targets. The outlook from them is pretty gloomy in terms of them being able to step in and provide more volume, or even keep up with expected volume. So no one is riding to the rescue on this one. It's the ways to play, we feel, are to be sticking with stocks like Paladin, target price of $1.50. Stocks like Bannerman have huge leverage, and that stock could quite possibly double over the course of the next year. It's a large project, but it's low grade, meaning that as the we've seen the spot price of uranium travel up and really just sail past $100 a pound, which was unthinkable even a couple of years ago. The leverage that they have with that asset in the ground is enormous to their NPV. Stocks like Silex. Silex is a uranium processor. They're really the next generation of technology, and the IP that they hold is pretty amazing of how they're going to be able to deliver product to market. We think that stock could be worth $7.60. Stocks like Lotus are reaching final investment decision. They've got a couple of projects in hand at the moment in Africa, and even locally here, the darling stock of the sector over the course of the last year has been Boss Resources, led by Duncan Craib. Very clever management there in terms of strategically how they have managed to do exactly what they said they would do. And with Boss starting, they're really front and center as well. So Boss, we value, probably needs to grow into its valuation because the stock's done so well, but we value it at $4.75. And then you've got we had a recent capital raising for Peninsula. They're a US play. The government in the US is falling over themselves in order to support local producers. So lots that we can do there as well. And the price rise for Peninsula over the past couple of months has been very tasty indeed. So structural undersupply. This is not lithium. If companies like Tesla, they don't need the lithium immediately, but the utilities, if you're running a nuclear power station, they need it like oxygen.
All right. Well, I'll redeem myself for getting your commodities analyst wrong and actually quote your report, which I think you touched on there, that he who panics first panics best. We recommend investors get ahead of that potential panic buying. Great to get your insights too, Fraser. Thanks so much. Fraser McLeod there from Shaw and Partners. All right, let's have a look at the market leaders.
Market leaders, Weebit Nano. Why? Don't know, but it's up by 7%. Mineral Resources, we talked about that production report, and ResMed as well. Insight Tech Pivot, talking about returning cash to shareholders. That doesn't hurt.
No.
And Sims Metal Group, again, that's on no news, but there just has been more enthusiasm, optimism for, the cyclical, the resources end of the market.
Do you think people are getting bonuses or something? There seems to be a lot of cash just hitting the market
Interesting.
somehow.
And maybe some dividends as well. But Sims, I should say, probably also harkens back to China, as it's got a big resale market in China.
True. Let's have a look at the laggards. We know Domino's is going to be there, down 30%, $39.86. Sayona Mining also cutting staff there. We talked on that. Core Lithium, Block, and Worley under pressure too.
All right. Small to medium-sized companies, I dare say. Big Tin Can, looking good. I'm actually just going to see if there was anything, or if it's just sort of volatility that we're seeing, because it wasn't really a crash hot day for a lot of the big tech names. We've got Patriot Battery Metals on the list, Develop Global, and PYC Therapeutics. Let's get to the flip side of that equation. And Sayona Mining there yet again, as well as Atlantic Lithium, just carrying on that theme. From what's been really taking hold.
Peninsula was one of Shaw's picks there, so watch that one. 12 cents, down 8% today. All right, having a look at what we're going to look out for. Fourth quarter GDP from the US, also durable goods orders, new home sales and jobless claims, the EFO investor confidence from Germany, and also the ECB monetary policy statement. Yeah,
I think we might have buried the lead there, so we'll see what they've got to say on the likely trajectory for interest rates and reflections on inflation. It was really interesting last night. We did get the PMIs globally. We got the one from Europe really showing slowing, really exhibiting pressures being put on the economy, particularly from the energy sector as well, and then stood in really sharp contrast to the PMIs that came out of the US that were very strong. Services and manufacturing. So really interesting and really data dependent for the Fed, and that's why we'll all be checking our phones, even on holidays, when it comes to that inflation read on Friday.
All right, let's have a look as well in terms of what will come out. I guess tomorrow is still a day, even though it's not here. That will be closed, but Adair's comes through.
I don't know if that's going to come through tomorrow.
Yeah, I don't think it will if it's a public holiday, but we'll see. Tokyo core CPI coming through in Japan, as well as the Bank of Japan's policy meeting meeting minutes. Scuddy was telling me earlier this week he was among those caught surprised that the BOJ did not change its tune, but the growing likelihood they could start to move away from that ultra loose policy by April, perhaps.
They must have people typing those minutes out pretty quickly, quicker than they do here in Australia.
Well, it's a copy and paste often here, isn't it? Control C, Control V.
Look, let's get across just the final figures for the S&P ASX 200. It was a good day. Let's not take anything away. We had 5 sessions of a row, we'll call it a sesh now, of good gains. And week to date, Juliet, we're up by 1.8%. So quite a different story than what we were talking last Friday.
They should give you your citizenship for saying sesh. All right.
I have my citizenship.
Oh, you do?
Years ago.
I'm sorry.
That's
Oh,
okay.
dear. It's live TV. We'll see you next week.
See ya.